Well, hello, Maverick traders. Joe with you here. It's market roundup time, the 20th of November. Let's get through a Wednesday. I've got my 2 cents. You guys know how this works. Let's break down the meaningful news of the day. Let's take a look at these markets technically, and I've got a couple trades as well to share with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you'll see that we had pretty much another flat day. What was interesting about this one is, jumping into the daily news here, we had a late day rally that actually pushed things back to flat. We'll take a look at how we finished. But we are sitting at an upper trend line, above the 20-day moving average, and it looks like this election euphoria seems to be kind of playing itself out, which I'm excited for because that's going to give us something a little bit more sustainable in the future. NVIDIA earnings tonight, and that's about all I can see being the main driver of what's going to happen. And yes, folks, it will absolutely impact what happens tomorrow, no matter if we want it to or not. It's just too big. Let's get into how we finished today. The Dow 0.32, the S&P 0.00. I've seen this a couple times now, and it's kind of fun to see it close completely flat. And the Q's down just at 0.11. Russell's up about 2.9. You guys can see here. Oil down a little bit and gold up a little bit. But we were down pretty significantly for the majority of the day before we had this late date rally. Well, real quick, let's take a look at the advanced decline line. 52% declining, 44% advancing, so pretty flat. But look at that, 50-50 on the above below the 50-day moving average. Things are showing a lot of strength out there, and let's just jump straight into the chart. This was a very good pullback after a pretty euphoric move, as to be expected. Here's your results. It goes up. We set brand new highs. It's a beautiful trend line if you take a look at that. And then a nice pullback to a very stable place, right? Got a very comfortable looking 20-day moving average, 50-day moving average. So everything's still definitely glass half full, +2, +3 kind of a scenario. Today's candle I thought was really interesting because it looked like it really wanted to kind of push back against what we gained yesterday with this big green candle. Rob made mention of this. This is a confirmation of a bull pullback. It's a beautiful pivot point. Looked like we were kind of going to throw that away, but the markets decided to rally back. The volume has gotten a little bit quieter. It's still good. It's solid, but it's not too high or out of control. It's just kind of stabilizing. So overall, I don't think as much has changed over the last couple of days. I do know that NVIDIA will absolutely impact the markets just because it's such a big component of it. But we just got to make sure that we follow along with the charts, and we should be pretty safe. Moving over to the Qs, you're going to see it's a very similar chart. As it's got the exact same type of candlestick. A little bit more of a consolidation as it's flirted with its 20-day. The S&P was a little bit above it there. This is just kind of where it's at. And based on NVIDIA's earnings, folks, this could be very different, unfortunately. But where we're sitting, very glass half full. Let's take a look at how we finished when it comes to the heat map. Just kind of browns and greens. Whatever was green yesterday is probably a little bit brown today or red. I just see just push-pull. A lot of the trades that I've been looking at, all of my bulls are in corrective action, but they're still in great trends. A lot of my bears are in corrective action, but they're still also in great trends. So not a lot to go off of today when it comes to making a decision on overall sentiment. It's pretty much flat. So let's get into our market outlook. I'm going to go +2, and the reason why I have this at a +2 is because we just had that little bit of a consolidation right up here at that 20. But I do like the move that we had towards the end of the day, so +1 overall. Yesterday, folks, I would be a +2, +3. Today's little hesitation just makes me go from a +2 to a +1. If I'm going to lean to something, it's definitely going to be to the bull side. Anything that triggers the bull side, I'll be more than comfortable putting on. Now that I've said that, folks, let's take a look at some of the trades I have that I'm looking at, and NVIDIA can change a lot of the sentiment, at least in the shorter term. I found a couple others. I've got my list that you've seen. I still like them. BKR and CNX, I'm seeing a little bit of a push in the energy sector. It could just be a corrective move, but BKR looks a little bit more than that. And then on the bear side, a lot of the consumer cyclical, I'm seeing stuff. I've got Foot Locker down there. You'll see I've got Skechers we're going to look at here in a second. But Ross stores, a lot of these retails kind of bleeding off. Nike was another one. I'm not sure if that's just anticipation of a slowdown or a slow holiday, but a lot of weakness in the consumer cyclical. So let's just jump straight into BKR. I like Baker Hughes. I just love it. I love the high base, the consolidation pattern that breaks off to upper highs. It's a great one. I just love the high pace breakouts. I wouldn't get too aggressive with pretty much anything here. If the markets continue to go higher, we do confirm that bull pullback in the SPY or the SPX there, then I'd be more than comfortable putting on something like a vertical spread or some sort of a diagonal spread in Baker Hughes here. Let's move over straight to the bear. I didn't have anything on the sideways stuff. There is sideways stuff still going on, but you just have to respect the range it's in. Right now, I'm just kind of looking at bulls and bears. Here's Skechers, and I'm seeing a lot of the same pattern in that consumer cyclical. So guys, take a look at that. There's some good trades to the bear side there if the markets do roll over. This is Skechers. You guys know me. It's early yet, so it's something that I'm not jumping in tomorrow. What I would like to see is a little bit of a penetration through this huge candlestick that it's set towards the end of October there. But if it just keeps bleeding off, this is also going to be a vertical spread. Nothing super aggressive like a straight put. This is going to be a diagonal, maybe a targeted butterfly. Snap the Fibos on this. If you guys got Bollinger Bands, maybe use that lower area as a target. But I'm going to stay short term for now. I'm still pretty comfortable with week and a half, 2 weeks as far as my trades go. But overall, the sentiment hasn't really changed much. It's still bullish. So keep that in mind. So here's our outlook. So the markets regained losses today, showing some consolidation at current levels. So it's pretty cool to see that there's comfort there. There's buying coming in off of a quote unquote bottom that pushed these markets up. They're comfortable above that 20-day moving average. That just shows a little bit of confidence or bullish sentiment. Election euphoria and its volatility looks to be subsiding. I'm still seeing reactionary moves, a lot of it in the currency department, more of the crypto stuff. But I'm hoping that kind of just gets out of the way so we can get into something a little bit more stable and consistent. Worries of executive intervention into the FOMC. Yes, I know, folks. I'm bringing it up because I've dealt with a lot of conversations over the last week or so of what could, should, might, shouldn't. It doesn't matter. Focus on the data. We are in a very strong place. Once again, it's so cool to see a soft landing. I've never witnessed one. And we're right in line. We have a very strong consumer. We have a very stable job situation. The U.S. is doing great. Our currency is super strong because of it. The expectations of slowing down interest rate cuts has increased the strength of the dollar. And so we have a great place. So any of these worries or fears, we'll worry about it if it happens. Until then, let it go. Don't let it change your mind. Please do not let it make decisions on going long or short. Jobless claims, Philly Fed, existing home sales. So we don't have too much coming up for the rest of the week. Down at the bottom there, NVIDIA. It's the elephant in the room, folks. It shouldn't be, but it is. Anybody that doesn't follow the stock market will know exactly what's going on with NVIDIA and how it's working. And since I'm blabbling at you, let me pull it up real quick. Okay, so it's down like $2, 1.71%, barely slight, but it looks like NVIDIA sees operating expenses rise in part due to they're worried about expenses or costs moving forward, but it did come in line. It shows growth, beat numbers, looks good. It's down just a bit. That can change immensely. You guys know how this works. So just be mindful of that. Expect volatility in the morning. Stick to your plan, folks. Trade what's in front of you and try to keep the bias out. If you're uncomfortable with anything, don't push a button. All right, that's my 2 cents. Thanks for joining me, folks. Talk to you next time. Bye, everybody.